Hey everyone, welcome back to the channel. Today, we're diving into a topic that a lot of people find intimidating, but I promise it's more accessible than you think: investing. You might hear the word investing and immediately picture Wall Street traders in fancy suits, shouting at screens. But the truth is, investing is simply a way to make your money work for you, and anyone can get started, even with just a little bit. So, if you've ever felt like investing is some exclusive club you can't join, stick around, because we're about to demystify it all. So, why should you even care about investing? Well, think about the money sitting in your regular savings account. It's safe, sure, but it's probably not growing much, right? In fact, with inflation, the value of that money is likely decreasing over time. Investing gives your money the potential to grow at a much faster rate. It's about building long-term wealth, whether your goal is a comfortable retirement, buying a home, or just achieving financial freedom. It's a powerful tool for building the future you want. Now, the big question: how do you actually start? The first step isn't about picking a hot stock. It's about understanding your own financial situation and goals. Ask yourself, what am I investing for, and what's my timeline? Someone saving for a down payment in 5 years will have a different strategy than someone saving for retirement in 30 years. You also need to figure out your risk tolerance. Are you comfortable with potential ups and downs for a higher reward, or do you prefer a slower, steadier path? Answering these questions honestly is your foundation. Once you have your goals set, you can start looking at where to put your money. For beginners, a great place to start is with low-cost index funds or ETFs. Think of these as baskets containing a wide variety of stocks or bonds. Instead of trying to pick individual winners, you're buying a small piece of the entire market. This automatically diversifies your investment, which is a fancy way of saying you're not putting all your eggs in one basket. This strategy is famously recommended by successful investors like Warren Buffett for its simplicity and solid long-term performance. The most powerful force in investing is consistency. You don't need a huge lump sum to begin. A strategy called dollar cost averaging, where you invest a fixed amount of money at regular intervals, like $50 or $100 every month, is incredibly effective. When the market is down, your fixed amount buys more shares, and when it's up, it buys fewer. Over time, this smooths out the bumps and can lower your average cost per share. The key is to automate it and be patient. Don't panic and sell when the market gets rocky. Remember, investing is a marathon, not a sprint. So there you have it, the basics to get you on your way. It's all about understanding your goals, starting with diversified, low-cost options, and being consistent. The most important thing is just to get started. The best time to plant a tree was 20 years ago, the second best time is today. The same goes for investing. I hope this cleared things up and made the idea of investing feel a lot less scary. If you found this helpful, give this video a thumbs up and subscribe for more content. Thanks for watching, and I'll see you in the next one.